Hey traders, channel is a very classic price action pattern that each trader must know, and channel is applied for forecasting, for making predictions, and actually for trading. And there are different types of channels, and one of the ways to classify the channels is based on its boundaries. In this video, we'll discuss three main types of such channels. I will teach you how to read them properly, how to recognize them properly. I will show you very nice examples of such channels, so it will be a very practical lesson for you. Don't forget to like this video, subscribe to my YouTube channel, and let's start. The first type of a channel is a parallel channel. Within the parallel channel, the market is following two parallel trend lines. And what is important for you to note about the parallel channel is the fact that most of the time the market is very harmonic within the channel. By harmonic, I mean that the legs of a move within the channel are almost equal. So here, if we take the bullish leg right here within this rising channel and compare that to the second bullish leg within this rising channel, you can see that they are almost equal. And same thing is with the bearish legs. If we take that initial bearish leg right here and compare that to the second bearish leg within the channel, you can see again that they are almost equal. And basically, the channel signifies the healthy trading market. Yes, in a rising channel, you are catching the trend following trading setups from the support of the channel and the counter trend trades from the resistance of the channel. And of course, the breakout of the channel signifies the violation of the bullish trend. Yes, if we see the breakout of the rising parallel channel, and if we see the breakout of a falling parallel channel, it most of the time signifies the violation of a bearish trend. So it is very common price action patterns, and let's discuss the example. Hey traders, if you want to learn price action patterns, if you want to learn more tips about channels, if you want to learn how to trade them properly, you will definitely enjoy my ebook. On my website vasilytrader.com/ebook, you can actually look inside the book. You can see what is inside, you can see the examples of the chapters there. In my ebook, I was trying to combine all the things that I know about trading. My entire trading strategy is inside, from trading basics to advanced techniques and tips. Definitely check it, you will enjoy it. The link in the description below. Let's continue. A falling parallel channel is spotted on the Aussie-New Zealand pair. Here the market is trading in a bearish trend, and low highs and lower lows of the price action here respects the boundaries of this parallel channel. And for us, it is the indicator that the market is trading in a healthy bearish trend. And for us, the safest point to sell the market is the resistance of this channel. From the resistance of the channel, we will expect a bearish continuation to new structure lows. And that point gives us the best point to catch the trend following movement, while the touch of the support of the channel gives us the point from where we will expect a pullback, a correctional movement to the resistance of the channel. The second type of a channel is called the contracting channel, and within the contracting channel, the price action is weakening. If we talk about the rising contracting channel, bulls are becoming weaker and weaker there, and if we talk about the falling contracting channel, bears are weakening there. And the distance between the boundaries of the channel contracts, yes. And if we measure right here the length of the initial bullish leg within this contracting channel and compare that to the second bullish impulse within this contracting channel, you can see that the second one is definitely weaker, yes. And then if we take the third one is even weaker. It just tells you that the market is exhausted. The market is preparing for a reversal, and your trigger right here is the breakout of the wedge. If we see the bearish breakout of the rising contracting channel, it is a very strong bearish signal. And if we see the bullish breakout of a falling contracting channel, it is a very strong bullish signal. And the rising contracting channel by itself is the reversal path. Yes, and if the parallel channel was the indicator of the healthy trading market, here this pattern definitely tells us about the weakness, yes, and is considered to be a very important warning clue. Rising wedge pattern is spotted on the S&P 500 index, and even though the boundaries of the rising channel still serve here as the points to buy or sell the market, we must admit that the market is weakening right here. If we measure the lengths of the bullish legs within this rising wedge, we will see the contraction, the weakness, yes, and it simply is the warning sign for us that the market is exhausted. And here what we are looking for, we actually are waiting for the breakout of the support of the wedge, and we don't know how much time the market will actually spend within this wedge. Yes, for the trend following traders, its support still serves as the point to buy from, but being the warning clue, the breakout of its support will lead to a very strong bearish movement. Yes, and most of the time when we see the wedge, I recommend to my students to look for the breakout of that, yes, and not treat its boundaries, because it is very risky. While a contracting channel was the indicator of the weakening price action, the expanding channel tells us about the increasing momentum. Here, within the rising expanding channel, after each and every test of the support of the channel, bullish legs become stronger and stronger. We see the increasing bullish momentum right here, and it definitely tells us that the bullish trend here becomes stronger and stronger. Same thing with the bearish expanding channel, or by the way, the expanding wedge. Here, after each and every test of the resistance of the channel, we see very strong bearish legs, yes, and after each and every test of its resistance, more and more sellers are willing to sell, and the market is going to new and new lows, and the distance between these lows become bigger and bigger. So the expanding wedge pattern signifies a very strong bullish or bearish trend, yes, and in comparison to the contracting wedge, here we see the increasing momentum. The expanding channel is spotted on dollar index, and you can see that right here. After each touch of the support of the channel, we see a very strong bullish reaction, yes, and each time this reaction becomes stronger and stronger, it simply signifies that the momentum here, the bullish momentum here, increases. And after each and every touch of the support of this expanding wedge, we will expect the very strong bullish movement, the movement that will be stronger than the previous one. Yes, and here what I recommend to my students, once we spot such kind of pattern, I recommend to only buy the support, yes, of this pattern if we have the rising expanding channel, or only sell the resistance if we have the falling expanding channel, because these points give us just naturally the best trend following trading opportunities with very high potential profit. Alright traders, I hope you see right now that each and every type of a channel tells you a different story, and for you it is very important to recognize these channels properly, to read them properly, and of course it takes time, so practice. Only with practice you learn how to read the price action. For more education, for more tips about channels, about other patterns, don't forget to check my ebook, the link in the description below. Please like this video, subscribe to my YouTube channel, and I will see you next week.